All right, so when a giant like Toyota drops its financial results, you'd think it would be a pretty simple story, right? Well, their latest report, it's anything but. It's this really fascinating puzzle where the pieces just don't seem to line up. So what is really going on with one of the most successful car makers on the planet? Let's dive in and decode these numbers together.
I mean, on the surface, people just can't get enough of their cars. Demand is through the roof, sales are absolutely booming. You'd think the company is at the top of its game. But, and this is a big but, lurking just under that shiny exterior is a completely different story. It's a twist that kind of changes everything.
Okay, so here's how we're going to crack this case. We'll start with their Q3 report card, then check out the global sales boom. From there, we'll get to the heart of it, the profit paradox. Then we'll dig into the billion-dollar headwinds they're up against, and finally, look at what this all means for the road ahead.
All right, first up, Toyota's Q3 report card. Let's get right to the source here. We're looking at the numbers for the first 9 months of their fiscal year, and this is really our starting point for figuring this all out.
And when you first look at it, everything seems fantastic. I mean, the numbers suggest a company that's just firing on all cylinders, pedal to the metal, cruising toward a record year. It's the kind of report card any CEO would love to show off, for sure.
So let's really dig into that good news. I'm talking about a global sales boom. The most obvious sign that things are going well is just how many cars are selling. The demand is absolutely undeniable, and it's happening all over the globe.
Just look at this number, over 8.6 million vehicles sold. And that's in just 9 months. That is a massive figure, up almost 4% from the year before. The takeaway here is crystal clear. People want Toyotas more than ever.
But what's interesting is where that growth is coming from. It's not the same everywhere. You can see Asia actually saw a little dip, but check out North America, it was on fire with a huge 13.5% jump in sales. That incredible surge is really what's powering this whole global boom.
And it's not just about selling more cars in general, it's about selling the right kind of cars. A huge driver of all this success is the growing demand for electrified vehicles. Toyota is really capitalizing on this shift, and it's a massive part of their story right now.
So they sold almost 3.8 million electrified vehicles. And get this, traditional hybrids, the tech that Toyota basically pioneered, still make up a whopping 92% of that. But the real story, the thing you gotta watch, is the fully electric segment. Yeah, it's a small slice of the pie right now, but its sales absolutely exploded. We're talking up by nearly 150% year over year. Wow, that's a huge signal for where things are headed.
Okay, so sales are up, EV demand is surging, everything's great, right? Well, not so fast. This is where our story takes a really sharp, unexpected turn. This is where we get to the heart of the paradox. Soaring sales, but sinking profits.
Now, to really get what's going on, we need to talk about one specific term: operating income. Just think of it like this. It's the profit a company makes from its main business. In this case, building and selling cars. It's the money they have left after paying for everything it takes to run the company, but before taxes and all that.
And here it is. This is the paradox, plain and simple. On the left, you see sales revenue is up by a staggering 2.4 trillion yen. But on the right, that core profit, the operating income we just talked about, is down by over 482 billion yen. Let that sink in. They brought in way, way more money, but ended up with way less profit. How does that even happen?
So that brings us to the next logical step. We have to play detective. If all that money isn't ending up as profit, where did it go? Well, the report actually gives us some big clues. It points to these massive external forces, these billion-dollar headwinds that are just battering the company.
So, what's causing this massive profit plunge? I mean, this is literally the multi-billion-dollar question, right? With sales this high, what on earth could be so powerful that it not only erases all that growth, but actually pushes them into the negative?
Well, the report points to one single culprit that is just massive: 1.45 trillion yen. That's the estimated full-year negative impact from U.S. tariffs. Tariffs are basically taxes on imported goods, right? So it just makes it way more expensive for Toyota to sell cars in one of their biggest markets. A 1.45 trillion yen hit, that's just an astronomical number. It's a direct, massive blow to their profits.
And it's not just the tariffs. On top of that, the report also points to a general increase in expenses as another major problem. Now, this is kind of a catch-all term, right? It covers everything from the rising cost of materials to shipping, and all of it just eats away at their profit margin.
So, faced with all this, what's Toyota's plan to fight back? Because, they're not a company that just sits around and takes it. They've got a plan. Toyota is famous for its efficiency, and believe me, they are putting that reputation to the ultimate test right now.
So here's their strategy. It's basically a three-part plan. First, they're working on initiatives to reduce their break-even volume. In simple terms, that means trying to make a profit even if they sell fewer cars. Second, they're strengthening what they call their earning power for the long term, basically making every single car they sell more profitable. And finally, they're working hand-in-hand with all their suppliers to increase productivity and find savings across the board.
All right, so we've seen the problem and we've seen the plan. Now let's look at the road ahead. What does all this mean for their full-year outlook?
So, despite all these challenges, Toyota has updated its full-year forecast. They've taken everything into account, the good, the bad, the high sales, the huge costs, and this is what they think the year will look like when all the dust settles.
And here's the bottom line, negative 20.8%. Despite selling more cars than ever, they're forecasting that their full-year operating income will be down by more than 20% compared to last year. That one number really tells the whole story, doesn't it? It shows you just how powerful those financial headwinds are.
And this quote from their report really sums up their whole approach right now. They say they're steadfastly advancing product-centered management and will strengthen our earning power. What that really means is they're doubling down on what made them Toyota in the first place, focusing on making great products, cutting out waste, and just building a stronger, more efficient company for the future.
Which, of course, leaves us with the big final question. Can Toyota's famous efficiency actually outmaneuver these incredibly powerful global economic pressures? What we're watching here is a classic showdown, It's the legendary Toyota way versus these huge forces like tariffs and inflation. And honestly, how this turns out won't just tell us about Toyota's future, but maybe the future of global manufacturing as a whole.